Exam Scholar, Real Estate Edition.
Question 1. If a person has no cash on hand but offers a personal note payable in 60 days as a deposit on real property, this would be A. An unacceptable form of payment. B. Acceptable if the seller is informed beforehand by the agent. C. Void. D. Both A and C. Answer. B. The personal note is an acceptable form as a deposit, but the seller must be advised of this before the agent can accept it. Question 2. A mortgage company that originates loans that are then placed with lending institutions of whom the company has a pre-existing relationship is best known as A. Corrupt. B. A mortgage broker. C. An intermediary. D. A distributor. Answer. B. The best definition of a mortgage broker is a mortgage company that originates loans that are then placed with lending institutions. Most commonly, the lending institutions and the mortgage company have a pre-existing relationship. Question 3. The difference between the interest rate and the index on an adjustable rate mortgage is best known as A. Margin. B. Differential. C. Substitution rate. D. None of these. Answer. A. A margin is the difference between the index and the interest rate on an adjustable rate mortgage which remains stable over the life of the loan. Question 4. If an individual is representing a firm that makes loans on real property, they would be known as A. A lender. B. A broker. C. An intermediary. D. An attorney in practice. Answer. A. An individual can represent an institution that makes loans on real property, and both the individual and the institution can be called a lender. Question 5. A firm that makes loans on real property based on an individual's creditworthiness is known as A. A creditor. B. A lender. C. A loaner. D. A lendee. Answer. B. In real estate, the firm or institution that makes loans on real property is called a lender. The lender makes loans based on the individual's creditworthiness. Question 6. A lease is best known as A. A written agreement between the property owner and tenant outlining the conditions under which the tenant may possess the property. B. A written document between the property owner and tenant describing the length of time the tenant may occupy the property. C. An oral agreement between the property owner and tenant agreeing to allow the tenant to occupy the property for more than 1 year. D. None of these. Answer. A. In this case, the best answer for a lease is a written agreement between property owner and tenant outlining the conditions under which the tenant may possess the property. This would include length of time as well as payment due dates. Question 7. A unique mortgage that allows for the lender to make payments to the homeowner, allowing owners to convert equity into cash, that does not need to be repaid until the borrower vacates the property is best known as A. A reverse accrual mortgage. B. A reverse annuity mortgage. C. A reverse home equity conversion. D. An annuity payment conversion. Answer. B. A reverse annuity mortgage is also known as a home equity conversion mortgage, HECM. This type of mortgage allows for the homeowner to collect payments from the lender, converting the home equity into cash. This type of mortgage does not need to be repaid until the borrower no longer occupies the property. Question 8. If Jerry was asking to receive a loan in which the interest rate does not change during the term, he would be asking for this type of mortgage. A. A non-adjustable mortgage. V. A fixed-rate mortgage. C. A conventional fixed-rate mortgage. D. Any of these. Answer. B. A fixed-rate mortgage is a mortgage loan in which the interest rate does not change during the loan term. Question 9. If an occupant is legally expelled from real property, this is known as A. An ejection. B. An eviction. C. An evocation. D. An expulsion. Answer. B. An eviction is the lawful expulsion of an occupant from real property. This can be accomplished by the property owner through the court processes. Question 10. Real estate taxes, hazard insurance, and mortgage insurance are typically paid by A. Escrow disbursement. B. Personal property taxes. C. Real property taxes. D. None of these. Answer. A. Real estate taxes, hazard insurance, and mortgage insurance are typically paid by escrow disbursements. Question 1. This usually refers to the loan officer's written opinion of the ability of a borrower to qualify for a home loan, after the loan officer has made inquiries about debt, income, and savings. A. Qualification. B. Pre-qualification. C. Inquiries. D. Acceptance. Answer. A. Pre-qualification usually refers to the written opinion of the lender on the borrower's ability to qualify for a mortgage after looking at the borrower's debt, income, and savings. Question 2. What does the term ARM mean? A. Adjustable rate mortgage. B. Adjustable return mortgage. C. Addendum requirement management. D. Adjustable rate market. Answer. A. ARM is the abbreviation for adjustable rate mortgage. Question 3. What provides separate housing units for more than one family, although they secure only a single mortgage? A. Multi-dwelling units. B. Condominiums. C. Multi-family housing projects. D. Multi-occupant apartments. Answer. A. Multi-dwelling units are housing units that provide housing to more than one family but are secured by only a single mortgage. Question 4. This is paid by a mortgager for mortgage insurance, either to a government agency such as the Federal Housing Administration or to a private mortgage insurance company. A. Mortgage insurance premium. B. FHA insurance premium. C. VA insurance premium. D. Lender insurance premium. Answer. A. The mortgage insurance premium is paid by a mortgager for mortgage insurance. Question 5. This person solicits loans, represents the lending institution, and represents the borrower to the lending institution. A. Loan officer. B. Equity manager. C. Account officer. D. Loan manager. Answer. A loan officer is the person that solicits loans and represents the lending institution and then the borrower. Question 6. This is a way of holding title to a property when the mortgager does not actually own the property but rather has a recorded long-term lease on it. A. Leasehold estate. B. Life estate. C. Lease in full. D. Writ of judgment. Answer. A. A leasehold estate is a way to hold title to a property without actually owning the property. Question 7. This is a decision made by a court of law. A. Judgment. B. Abstraction. C. Ruling. D. None of these. Answer A. For this question in relation to real estate, a judgment is a decision made by a court of law. Question 8. This entity manages the common areas of a condominium project or planned unit development and owns title to the common elements in a planned unit development but doesn't in a condo development. A. Homeowners Association. B. Homeowners Corporation. C. Cooperative Corporation. D. Condominium Charter. Answer A. The Homeowners Association manages the common areas of a condominium project or planned unit development. It also owns title to the common elements in a planned unit development but doesn't in a condo development. Question 9. This is an unconditional unlimited estate of inheritance that represents the greatest estate and most extensive interest in land that can be enjoyed and is of perpetual duration. A. A fee simple estate. B. A life estate. C. A leasehold. D. A freehold estate. Answer A. A fee simple estate is an unconditional unlimited estate of inheritance that represents the greatest estate and most extensive interest in land that can be enjoyed and is of perpetual duration. Question 10. This is a consumer protection law that regulates the disclosure of consumer credit reports by consumer/credit reporting agencies and establishes procedures for correcting mistakes on one's credit record. A. Fair Credit Reporting Act. B. Uniform Commercial Code. C. Fair Isaac Corporation Act. D. None of these. Answer A. The Fair Credit Reporting Act is a law intended to protect the consumer by regulating the disclosure of consumer credit reports and establishes procedures for correcting mistakes on a credit report. Question 1. What is used to convey title to items sold in a business? A. A deed. B. A bill of sale. C. A title of trust. D. A receipt. Answer B. In conducting a transaction in a business, a seller legally conveys title to an item with a bill of sale. In this case, the correct answer is bill of sale as it is most correct. Question 2. What is sales tax considered? A. A tax on any property sold. B. A tax on anything sold. C. A tax on tangible personal property. D. A tax on income. Answer C. Sales tax is a tax on tangible personal property. Typically, sales tax is not charged on electronic media products, delivery of products, and other related items. Question 3. If a broker obtains an exclusive listing, the broker can be reimbursed for expenses when A. There is an expense that was unforeseen by either party. B. There is more advertising that needs to be done. C. It is authorized by the seller. D. None of these. Answer C. Expenses that a broker accrues are normally not reimbursable unless specifically authorized by the seller. Question 4. In the exercise of police power, which of these is not related? A. Public health. B. Safety. C. Compensation. D. Morals. Answer C. Compensation need not be paid in the exercise of police power. It is to be used by the state for the public health, safety, morals, and general welfare of the people. Question 5. A series of ordinances enacted by a state or local governmental entity, establishing minimum requirements that must be met in the construction and maintenance of buildings is best known as A. Zoning. B. Building codes. C. County building laws. D. Eminent domain. Answer B. Minimum requirements that must be met in the construction and maintenance of buildings that are ordinances enacted by the state or local government is best known as building codes. Question 6. An offer has been accepted by the buyer and the seller. The buyer and seller instruct the broker to return the deposit money to the seller. The broker A. must return the deposit money but can sue for the commission. B. can refuse to return the deposit money because the deal has closed. C. has the option to sue for a commission or return the deposit money. D. can choose to do as he or she wishes. Answer A. The broker in this type of circumstance must return the deposit money if instructed to do so by the seller. However, the broker can choose to sue for any commission money due if needed. Question 7. If another offer is introduced to an agent on the sale of a home, the agent A. must submit the offer to the seller immediately. B. should wait to have a response from the seller on the first offer. C. must notify the prospective buyer that there is another offer already in place. D. none of these. Answer A. all offers on a property for sale must be submitted to a seller immediately. Question 8. If a note is sold for less than the face value, this is known as A. percentage note. B. discounting the note. C. note sales fraud. D. none of these. Answer B. anytime a note is sold for less than its face value, this is known as discounting the note. Question 9. A person that can obtain funds for a purchase of property is known as A. a true buyer. B. an able buyer. C. a slam dunk. D. pre-qualified. Answer B. In this case, the correct answer is able buyer. In some cases, if the buyer has already gone to a lender and the lender has verified everything is okay to make a loan, this would be called pre-qualified. Even if a buyer is pre-qualified, however, there still can be issues that can cause a deal to fall through. Question 10. Under a trustee's power of sale, the right to foreclose a trust deed expires. A. in 3 years. B. in 5 years. C. in 7 years. D. never. Answer D. The right to foreclose on a trust deed under a trustee's power of sale never expires. A trust deed is not a contract but a conveyance of title. Question 1. A special type of appraisal used for property tax purposes is called A. an assessment. B. an appraisement. C. a survey. D. an estimate. Answer A. An assessment is a special type of appraisal used in determining property taxes. Question 2. If a tenant has been defiantly not paying the required rent to the landlord has the right to personally evict the tenant. B. change the locks. C. bring court action. D. harass the tenant with phone calls day and night. Answer C. In regards to tenant and landlord relationships, the Landlord-Tenant Act in most states has clearly defined court procedures with timelines for the eviction process. Question 3. Which of these is associated with a deed? A. defeasible fee. B. Alienation clause. C. APR. D. Hypothecation. Answer. A. A defeasible/indefeasible fee is associated with a deed. The other listed choices are associated with a mortgage. Question 4. What does the term alienation mean? A. Recording of judgment. B. Prescribing of a lien. C. Transfer of title. D. Exclusion of passage. Answer. C. The term alienation means transfer of title. Question 5. The power of attorney means. A. A broker is an attorney at law. B. A broker can execute contracts on behalf of the principal. C. A broker is able to sue in court. D. None of these. Answer. B. Of the answers provided, the power of attorney grants the broker the power to execute certain actions on behalf of a principal. Question 6. Although an agent working under a broker is an independent contractor, the broker is still responsible for A. Making sure the agent completes tasks on time. B. The legal licensing and ethical activities of the agent. C. Providing a safe and hospitable work environment. D. The assignment of tasks and duties of the brokerage. Answer. B. The broker is required by law to be responsible for the legal licensing and ethical activities of the agents associated with the brokerage. Question 7. What is the doctrine of caveat emptor? A. A code of ethics. B. A doctrine of tenant rights. C. Let the buyer beware. D. Must be signed at closing. Answer. C. Caveat emptor is a Latin phrase meaning let the buyer beware. Essentially, it proclaims that the buyer must perform their due diligence when purchasing an item or service. Question 8. Mark, the seller, did not disclose the special assessment that will be due to the new owner in the near future after the sale is made, even though Mark knew of this development beforehand. In this case, Mark A. has done nothing wrong. It is only the agent that is bound by disclosure. B. has committed fraud. C. has been unethical but not illegal. D. none of these. Answer. B. Both agents and sellers have the commitment to disclose any and all pertinent facts about a property. Question 9. If a broker shows a home to a potential buyer and they wish to make an offer on it, what legal responsibility does the broker owe the customer? A. Honest and fair treatment. B. Fiduciary duty. C. Confidentiality. D. Exclusivity. Answer. Because the potential buyer is a customer of the broker, the only obligation the broker has is to treat them fairly and honestly. There is no fiduciary duty. Question 10. What legally obligates the buyer to pay the broker's fee? A. The exclusive right to represent. B. The broker protection clause. C. The legal rights of fiduciary duty. D. The contract. Answer. B. Unless the buyer hires another broker and then buys a property, the broker protection clause obligates the buyer to pay the broker's fee. Question 1. Mutual mortgage insurance would be included in the issuance of A. A conventional loan. B. A CalVet loan. C. An FHA loan assumption. D. A VA-backed loan. Answer. C. FHA insures loans with mutual mortgage insurance. It is used by FHA to pay lenders any loss, within the insurance limits resulting from foreclosure. Question 2. Of the following factors, which is the one that would not contribute to obsolescence? A. Wear and tear from use. B. Out-of-date equipment. C. Change of locational demand. D. Misplacement of improvement. Answer. A. Wear and tear from use in physical deterioration. Out-of-date equipment is functional obsolescence. Change of locational demand and misplacement of improvement are both economic obsolescence. Question 3. Which of the following items would not be included in a bill of sale transferring a retail merchandising business? A. Inventory of stock. B. Assignment of leasehold. C. The trade name. D. List of fixtures and equipment. Answer. B. A bill of sale should include an inventory of the stock, the trade name, and a list of the fixtures and equipment. It would not include an assignment of the leasehold because that is personal property that should be transferred separately. Question 4. If an advertisement is placed in a newspaper advertising a home for sale and only the annual percentage rate is stated. A. The amount of the down payment must be included. B. The number of payments must be included. C. Additional disclosures are not required. D. The amount for the payment must be included. Answer. C. Stating the ARP is sufficient disclosure for the ad. The disclosure statement issued at or before closing would include a breakdown of the costs of credit, but not the ad. Question 5. What document is issued when a judgment for sale of the property is made by the court? A. Writ of execution. B. Attachment. C. Abstract of judgment. D. Sheriff's deed. Answer. A. A judgment by the court ordering the sale of property is known as writ of execution. An attachment holds property for court judgment. An abstract of judgment is a written decision of the court, when recorded creates a lien. A sheriff's deed is issued to the holder of a certificate of sale after the 1-year redemption period has passed under the terms of the mortgage foreclosure proceeding. Question 6. In the sale of a business opportunity, which of the following would contribute the least to goodwill? A. Advertising over a period of time. B. Continued public patronage of the establishment. C. Pleasant associations in the customer's minds because of past associations. D. Adequate stock and modern fixtures. Answer. D. Goodwill is defined as the expectation of continued public patronage. Of the choice offered, adequate stock and modern fixture would contribute the least to that expectation. Question 7. A licensee who has several years of experience in the industry decided to retire from actively marketing properties. Now she helps clients choose among the various alternatives involved in purchasing, using, or investing in property. What is her profession? A. Real estate counselor. B. Real estate appraiser. C. Real estate educator. D. Realtor. Answer. A. Advising and guiding investors and other buyers as counseling them. Many states require a person to have a real estate license to serve as a real estate advisor/counselor for a fee, since it involves skills and duties closely related to real estate brokerage. Question 8. An advertisement for the sale of real property placed by a real estate broker is prima facie evidence of fraudulent and misleading information when A. A misleading map is included in a newspaper advertisement offering a 20-year-old single-family residence for sale. B. The selling price and financing terms are not as stated. C. The interest rate on the note differs from its advertised yield. D. The name of the development is misspelled. Answer. C. Prima facie means on its face without further evidence. Real estate law specifically states that no place an advertisement concerning a note with an effective yield that does not also state the rate on the face of the note as prima facie evidence of fraud. Question 9. In an escrow, prepaid rents are normally A. Debited to the vendor, B. Credited to the vendor, C. Debited to the buyer, D. Credited to the buyer. Answer: D. The vendee is the buyer. The buyer normally receives the prepaid rents. Question 10. The words broker and realtor are A. Interchangeable, B. Different categories of membership in NAR, C. Different titles offered by separate professional organizations, D. Unrelated. A broker is a real estate licensee and a realtor is a member of NAR. Answer: D. Brokers are licensed by their state, realtors are voluntary members of the NAR, a trade association.
Exam Scholar, Real Estate Edition.